You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it is time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. I say bi-weekly, but we're down to once a week. This week, we, of course, had the Columbus Day holiday here in the States, so we thought we'd take a little time here to reflect and give you guys some time as well. Meanwhile, we'll pack as much as we possibly can into this jam-packed Thursday episode of the show. We are, of course, recording it today, Thursday, October 16th, and quite the October it has been so far. Quite the week it has been so far. But before we get into that, let me introduce the panelists, starting off with myself. My name is indeed Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. 13 fun programs for you guys to choose from on said network, including 300-plus episodes of the Option Block. I just realized the other day we've been doing this show for about 4 years, so an epic journey from options start to finish here on the old show. Quite a bit, nearly 400 episodes coming up on now for you guys to sink your teeth into. A lot there in the archives, nearly 400 hours worth of show. So a lot to sink your teeth into. If you've missed some older ones, go check them out. We might be able to resurface some excerpts as well, and maybe some best of format, something like that, because there's a lot of great content there over the previous 4 years. And of course, you can find all that content available wherever you find our finer programs, including the mothership, theoptionsinsider.com. If you're not surfing over there regularly, I encourage you to do so. A lot of fun stuff hitting that site all day, including education, analysis, breaking news from the options market, unusual activity alerts, and a heck of a lot more. Check it out. I think you're going to like it. And of course, you can always find our stuff iTunes, Stitcher, Aha Mobile, even the Options Insider Radio Network mobile app available for iOS, Android, and the Fire OS. No shortage of ways for you guys to check out this programming and find all the cool new stuff that we're adding to the network all the time. And speaking of new stuff, he's not new. He's kind of old, but we still like him anyway. He is none other than the Rock Lobster himself, Mr. Andrew Giovinazzi from the Pit. Mr. G, welcome back to the old program. Happy Rocktober to you, sir.
Wow, that's a rockin' introduction right there.
I have done this once or twice.
You know what? I do notice you have a certain sort of smoothness on the radio, a certain appeal that maybe somebody might like. I don't know. How long have you been doing this job? 1, 2 years, couple,
yeah,
second, third
6
time,
months,
like
6 months, something like that.
Something. A newbie, a veritable newbie.
Indeed. It is very new to me. It's not as if I get paid to do options radio or anything along those lines. It's just something I kind of fell into. But indeed, how are things? It has been a crazy week. We'll get into all the details, of course, in the trading block. And indeed, listeners, we will be joined by Uncle Mike Tusaw, fashionably late, as always. But I think without further ado, let's dive right into it. There's a lot to get to. It's time to get into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, welcome to the Trading Block. This is indeed the portion of the program where we break down what's been cooking, what's been moving, what's been lighting up our tape for pretty much this past week now, because it has been a lot going on. We didn't do a show on Monday, and it's hard to even know where to begin, listeners. So much going on. I think we'll start with yesterday. I thought yesterday was the rockinest of Rocktobers, pushing down around nearly 3% at one point there in the S&P, then rallying most of the way back. It was crazy. It was realized vol in its most epic form. You know, we've been lamenting on this show and on other programs on the network, whither the realized vol, where is the actual vol in the marketplace? You know, even when the VIX got down to the 12, 13 range, the VIX cash, of course, we were still saying, well, that's pretty expensive compared to the 4 or 5 or 6% realized vol we're seeing in the marketplace. Well, no longer is that the case. We're seeing some actual vol coming back into the marketplace. 10-day realized right now in the S out there, a rockin' 20. So we're getting up there. Things are moving. Things are rocking volume records across the board. I've said Rocktober a couple of times now. I usually hate that term. It's such a cliche, but this is truly the rockingest Rocktober I can remember in quite some time. We're doing it again today. The S&Ps were selling off pretty aggressively going into the early part of the session. We got down into the, I believe, the 1830 handles range or so. And as we're speaking today, right around the close, back up to 1865 or so out there in the S cash. So it's crazy business. The bears seem like they're getting a foothold. They're sinking their teeth in. Vol is skyrocketing. The indexes are selling off. Most of the major markets are selling off. And then some point during the session, around the middle of the session, the bulls start coming back and they rally it back to unched or nearly unched. So if you've just been paying attention close to close, Andrew, you've really missed a hell of a story. So, I mean, there's a lot to sink into. I'll let you start wherever you want because there's really a lot to cover on just these past few sessions alone.
Well, I think one of the fun things to look at is a chart of the VIX this year. The low was 1028, and I think last Thursday, on the opening last Thursday, the VIX was trading 15, and it traded 31 yesterday. So just, you know, for people at home, and, you know, we talk about short contracts and things like that, and VIX, you know, that's 100% move. That it's a double. It's pretty much a double. So just for our, you know, for our clients and people out there that, you know, look at all this, all this stuff is overpriced. There's a reason, because when volatility moves up, it can move really hard. And the biggest reason is liquidity providers. Remember, you know, liquidity providers, when you look in the option market, they are equilibrium providers, meaning they strive to keep a balance between buyers and sellers of options. And if all the option sellers go away, that means they're the only one. And up goes the vol as the buyers pop in, as Mr. Longo well probably remembers from his days in the SPX. So we have had a very volatile week and I think really this is similar to our, I guess it was the meltdown. This was, I guess we're just going to call it the inverse meltdown. I think it was, and to my mind, I think it was actually a good thing. Okay. The Fed basically saying they were going to, you know, QE was going to end, and they're thinking about raising rates sooner rather than lower. In the teeth of the Europeans, you know, backsliding and arguing with each other on who's going to cut their budgets more. I mean, the reality is that's the problem. You know, those governments are even fatter than ours, and they got to get cut, you know, those budgets. And they keep trying to make the Germans fund them. And the Germans are saying, well, we don't want to fund you. And that has caused a lot of disharmony over there in the markets, because that sows confusion. So the European markets are confused because everybody, there's one part sector that thinks that the Germans should step in and, let everybody borrow more money. And the Germans are like, no, we don't want to. It's time for you guys to come up with more sane economic policies so we don't have to keep doing this all the time. And right now they're having kind of a cage match on that. And that can go on for a while. And so right now, our market here is saying, well, if the Fed's not going to lower rates or do anything else, although Bullard did come out today and say, well, it's not unprecedented for QE to kind of stay on. We'll buy, whatever, $10 billion or whatever left of bonds per month. But as far as our, I don't see why we really need to do that. So the Europeans don't grow for a while until they get their act together. But the fact that our market, sold off basically from 2000 to 1800 was, I think that was healthy, as in that some of the growth expectations are starting to be dampened down a little bit. And as Tusa said, it's never been a better time to sell stocks. He wasn't kidding. So if you had to sell stocks, it was a good time. And they're marking these growth expectations to something maybe a little more reasonable. And, who knows? So and what that's done, though, is created a lot of churn, because just like we had kind of that terrible taper spring in 2013, early summer, we're getting it again, because there's an adjustment going on. And then everybody turns around and looks and says the lights are still on, and then they eventually stop selling. I don't know if that day is tomorrow, right? They could come in and we could see another load of selling on the opening because everybody's miserable in Europe. But they've got a lot tougher problems to fix than we do, because we just have one kind of slow, clunky government, and they have like 14. So our problems multiplied by 14, and then you have what the Europeans have to deal with. So,
of course, they don't have the Ebola fund that we're having over here. So that.
Yeah. Well, the CDC is doing such a great job of containing this.
Let's let the nurse who treated the man just fly on a plane. It's amazing. I don't want to get into the Ebola hysteria, because it is complete and utter nonsense. And if people are selling off as a result of it, then they're.
I think that definitely was part of it.
Yes, I agree. And it's
how long
amazing.
is the CDC going to go before they think they should address this? Okay, you already got it going on in Africa. What do they do all day?
It is amazing that this is their jobs, ostensibly. And the woman actually called them and said, should I fly? And they said, hey, sure. She said, I have a temperature. They said, hey, no problem.
Go for it.
It's unbelievable. I don't want to get down that rabbit hole. Then we're getting like the CNNs and everyone else of the world who's on Ebola 24-hour palooza. But it's crazy. Before we go down that rabbit hole, listeners, we are joined by our diehard bull, none other than Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, a lot for you to sink your teeth into. Seems like your side of the fence has been winning out the latter half of the day. The bears, like Andrew was saying, and some of the Europeans clearly falling into that camp, winning out the earlier part of the sessions. It is this great tug of war that makes a market, certainly making it a rockin' Rocktober. What's your take on the last few days worth of sessions? What's been going on in your neck of the woods? And just give us your general impressions of this 48 hours of madness we've been going through here.
It's been a lot of madness, to say the least. Just to reiterate, I had mentioned on the show on September 25th, I believe it was, because I know I get accused of being a constant bull all the time. But on September 25th, I'm gonna get you an exact date. Yes, it was September 25th. I sold all of the calls that we were in for SPY, and basically just reduced the delta exposure by probably 85 to 90%. And reason being was not because I was trying to call the market top, although I did get extremely lucky this time. I was looking at risk reward, in that if the market would have continued to have gone higher, my point to get back in would have been when SPY went to 202. In other words, basically made new all-time highs. And if the market were to, and I would have lost a little bit, I would have kind of missed some of the upside from there. However, if the market would have gone down or stayed the same, I was an obvious genius, but this is one time that I actually got it right, so I'm kind of happy with this. And by getting it right, it was just taking the right risk reward, in that if the market were to go up, if I were to be wrong, it wouldn't have hurt that badly. Now, since then, the market has come down. I believe I got out around 197 in SPY. I don't know the exact number, but between 197 minus 186, we're down about 11 points in SPY. We've lost, because I've been doing some small credit spreads, we're down about $2, so we've lost about $2 of the $11 over the course of the last couple of weeks. So when I say I'm long-term bullish, short-term cautious, that I've been saying pretty much my whole career, it's something that's very true. In times like this, you do need to protect yourself, and it's a very important thing. With that being said, I just basically have been rolling down put spreads, and I got out of all put spreads yesterday. I was looking to get in one later in the day, had this craziness not happened in the first hour of the day. I actually had a put spread in, was hoping that the market would dip again so I could get into it, but it did not get filled. But one thing that I did do today, probably about 45 minutes ago, right before the close, I got long again. And the area with which I got long was I bought back the February 199 call option. Now you're probably saying, but Mike, are you flipping crazy? You nut job you? Why are you buying a call option so far out of the money? Well, here's why. I want to explain my rationale for this. The rationale is that I got back in for $2.20, so I missed out on $3 of downside on that specific call option already. And I believe that if this market does come back, it's going to come back with a vengeance. I don't think it's going to just gradually putter on up another $5 to $10 in SPY or 50 to 100 points in the SPX. I think we're going to come back with a strong vengeance. If we do go down, I only have a couple dollars at risk. It's a very minimal amount, and I'm very confident in the abilities to generate that $2 or $2.20, whatever I got filled for today, between now and February through selling put spreads and call spreads and calendars, diagonals, and whatever it is I like to do during the day while I'm not going to the bathroom. So my opinion right now, I think that now is a good time if you are an eternal bull like me. We have had close to a 10% correction from the all-time high. So in looking at it, when the SPX touched 1820 yesterday, the exact number of where we would need to be to get to a 10% correction from the all-time high would have been 1817. And so if you combine that with the fact that we do have some legitimate levels of support at around the 1820 level in SPX, I think now if you can stomach this, if you can do something along the lines of a low-risk entry like I just did by buying a cheap call option, I think now is a phenomenal time to get in. The other thing that I want to disclose, last Friday, I rolled down for my long SPY positions. We were long the 199 put. I did eventually roll down to the 190 put. So I rolled down that put option for a little bit of a profit. We're down a little bit more in that one. However, I will mention right now on this show, I will not be rolling down that 190 put anymore this year. And the reason is I might roll it up if we pop back up, but I will not roll down anymore. The reason is that we're actually ahead of the market in a hedge strategy. We're almost never ahead of the market, but now we're ahead of the market on the year. And we have it set now to where my estimations, even if the market were to go to zero, we still have a very good chance of having a winning year. And I'm not going to take a winning year and make it into a losing year. So with that being said, I've made my bullish moves. We are probably about 10% off of the all-time highs. So we've had the correction, folks. If you're a bull like me, put your money where your mouth is and get in.
Yeah, I believe NASDAQ even at one point did touch that 10% level, which is the technical correction level, I suppose. So the S&P flirted with it. I believe the Qs got there briefly before they bounced. So you're right. It is pushing into technical correction territory at this point, which is kind of interesting. Of course, there were a lot of other micro issues at work, not just macro names we were looking at. A lot of indexes, of course, were trading like crazy. VIX, of course, trading like crazy, doing 1.8 million contracts yesterday, doing a wee bit less today, but still record 1.4 million contracts today from an options perspective, of course. The 1.8 is about a 3x to the ADV of about 600,000 contracts a day they have been averaging. So VIX was just lighting it up. And today, of course, 1.4 million also lighting it up. Of course, there were some other minor, I shouldn't say minor, smaller names lighting it up last night and today too, of course, and Netflix being chief among them. Netflix taking it on the chin post earnings, coming in, closing today off about 20% and giving off more in the after hours last night, closing today right around 362, 361.70 or so today. So not the best of times for Netflix. Of course, that timing of that announcement that HBO Go is going to go full online couldn't have been timed worse, or perhaps better if you're an HBO devotee, and not exactly good timing if you're a Netflix subscriber. But c'est la vie. It seemed like the narrative going into Netflix previously, we've joked about Netflix being the widowmaker and people loving to write premium in Netflix. It seemed like the narrative going into it this time was that, hey, vol is actually a little bit underpriced. We were looking at a lot of our listeners and people posting comments and, Twitter and Facebook and all that kind of fun stuff, and just polling people and asking what they thought. And then the definite vibe I got was vol definitely a little bit underpriced. So people actually leaning, it seemed like, on the premium buying side of the fence this time, which is a little bit odd for Netflix. People usually blast away premium left, right, and center in that name. So see people actually leaning towards the premium buying side of the fence makes me a little bit happy that they survived this yet another widowmaker apocalypse out here. Also, a lot of interesting feedback we got. I don't mention enough on the show. A lot of interesting feedback from Stock Twits. We are active out there. Options Insider is our handle if you want to look for us out there. And so if you are using Stock Twits, find us out there. We had some good analysis and good back and forth with you guys on out there as well. But unfortunately, that's all the time we have right now for the trading block. A lot more to get to into the show. So let's get on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, that funky tune means it is time once again for the odd block, the portion of the show where we break down some of the weird, the wild, the bizarre, and there certainly was a lot of that to choose from yesterday and indeed today. There was weird and wild activity pretty much across the board. We picked out a few interesting ones to mull over with you today, some of the lesser known names as opposed to what's going on in the Apples and the Facebooks and the VIXs of the world. Let's kick things off here with, this is the iShares iBoxx High Yield Corporate Bond ETF, ticker symbol HYG. Closing today 91 even, up about 50 cents or so on the day. And this is the name that does, as you might expect, some decent paper of late. Of course, some of that is inflated by the recent activity, averaging about 31,000 contracts a day, doing a whopping 120,000 today. So some serious paper afoot here in HYG. And what we saw pretty much was looks like an unwind potentially of a risk reversal. It was out in the December expiration cycle. And what caught our eye was, let me just pull it up here on my screens really quick, listeners. It was the DEIS 8392 risk reversal going up when we started profiling it this morning on the site 10,000 times. That went up in two blocks. As the day progressed, it went up a total of 35,000 times. That's on open interest of 25,000 on the puts and 20,000 on the calls. So clearly some opening paper or some piling in going on here. Looked like paper was buying the call, selling the puts. So this, if it was unwinding, it was on the bullish side, taking off what had been previously perhaps a bearish risk reversal out here in HYG. Didn't see the underlying, but it looks like this is a successful close, but perhaps a little bit extra to boot. There's, of course, 37,000 or so roughly open on the DEIS 93 calls as well. So those numbers seeing going up there could be related to those as well. Mr. Rock Lobster, a lot cooking out here in HYG. What was your take on this? You call it a combo. I call it a risk reversal. Potato. What's your take here on what looks like to be closing with perhaps a dash of opening here in HYG?
Yeah, I thought there was a little bit of that. I had to say it confused me. It's confusing me slightly because there's more paper that it went into it. Maybe playing a bounce. I thought they bought the 83 put and sold the 92 put originally, and then it felt like they were closing the spread today. They're selling out those DC 83 puts. Then all of a sudden, more paper goes up, which could be some sort of spread because there was a lot of 91 puts going up. Just kind of a whole palooza of stuff going on with this thing. So, I mean, it looked again like now the second amount of paper was actually selling the 92 calls. They were trading through the bid. So it was almost like two separate sets of customers, which sounds kind of odd considering all this huge volume is on one strike with all this open interest. So, and HYG is down from the highs. I remember we had, what was it, Dr. something that was looking for a kind of a...
Oh, Dr. Larry.
Dr. Larry. He had that implosion trade that he wanted to put on or something like that. It looks like somebody's just unwinding theirs.
Maybe Larry's doing a little bit more size than we give him credit for.
I think so. This is not a small position, 10,000 contracts, with actually almost 20,000 going up by the time we did it. So again, originally I'm seeing unwinding the puts, buying back the calls for even money. And there could be a little bit extra. Just look at the open interest tomorrow. But, I think this looked like some sort of potential reasonable hedge for, the high yields being at, I guess it looked like the HYG was at a 4 or 5 year high or something like that not too long ago. So somebody trying to take a little money off the table or hedge something along those lines. And that's what I make of it. But they're definitely getting out of it. I mean, if you look at sort of the recent sell-off in the paper in HYG, like, okay, I think I got my move down and I'm going to move on now. So, getting out for even, I'm sure they sold that 92 call for, a couple of bucks or something like that when the stock was trading, 94 or, HYG was trading in the 94 level, 94, 95 range. So this thing probably did very well. Just saying, wow, they can't see any more upside here. So aggressive, but probably really successful trade for this guy.
Yeah, I suppose this guy, they were shopping it around to get the first kind done, and someone they shopped it to said, hey, I'll take the other side of that actually and come in and do more of that maybe. So it is possible there is, a second customer piling in there. It would be odd, not unheard of. But yeah, it is definitely a weird one. Pay attention to the OI tomorrow, listeners, or as you're listening to this, because you guys can see and write us in what you think happened. We'd love to hear your ideas, your feedback. Meanwhile, we're going to move on to another newcomer, maybe not, but we haven't talked about certainly in a while. This is the Global FTSE Greece 20 ETF, ticker symbol GREK. I like that ticker symbol, GREK. Closing today about 15.5 or so, up about 50 cents or about 3.5%, on the day. This is the name that does about 1,200 contracts a day, doing almost 10x that, doing about 10,500 or so today. So some serious activity out here from a comparable perspective. This one, perhaps a wee bit more straightforward, Andrew. We got someone coming in pretty much doing two big blocks this morning of the OCK 15 puts coming in, and looks like paper buying them for between a dime and 15 cents. They had a bid posting up there. They pretty much took that out and kept buying more. Essentially, it looks like open interest 10,600, total of about a little over 10,000 going up on the strike. So it looks like pretty much straightforward. Someone had blasted out some puts. It worked out pretty well for him. Now he's taking them off for between a dime and 15 cents. They're coming out at a dime today at the end of the day. Pretty straightforward, Mr. Rock Lobster. That your take as well? Pretty much closing out some puts?
I think so. I don't know if they made any money, but this Greek index thing is at the bottom of its range. If you look at it the last month, I think it lost about half its market cap. As Greece, once again, it's not in the headlines anymore, but I think part of the issues that we're having here has to do with the backsliding that's going on over there. Yeah, this Greek thing was trading 20.5 3 weeks ago, and I think it was trading as high as 25 in March. So a pretty big chunk of money has come out of that thing. And
that's right. That's why this name sounds familiar to me. We have talked about this one before.
Yep.
And it was back
we were
on
talking about
August
call
8th.
rolling
Yeah.
when it was like 23, 24
We were
range.
talking about someone buying the SEP 23-24 call spread. I believe it was like about 4,000 or 5,000 times. That was back in early August. Clearly, the narrative has shifted a little bit. The stock down about 10 handles or so since then. So we have talked about this one before, but it has been a while. Certainly Greece, you're right, not in the headlines as much anymore, but still an interesting name to keep an eye on out here. GREK. I like the symbol at the very least.
Yes, and it had just a free fall. I think somebody bought some puts on spec, and they just didn't get the meltdown that they were hoping for, and they closed them out. So, but they were close. I mean, it got as low as 14.79 a couple days ago, but they're taking their little pennies and going home though, as it stands right now.
Take their dime and they're going home. All right, next up here on the old odd block, we've got wouldn't be the odd block without a cheapie. This one is Yingli Green Energy Holding Company Limited. This is an ADR, clearly. Ticker symbol Yogi, YGE. Closing today just a hair under $3, $2.87, up about 20 cents actually. So a robust day for Yogi. This is the name that does about 2,800 or so contracts a day, doing 28,000 today, so about 10x. A robust day as well for Yogi. What we saw, we'll cut our eye out here today, was a couple of different trades on two different strikes, the ACK and NOV 7s. We started off with the ACK 7s trading about 2,500 times on both the calls and the puts, listeners, going up in two blocks. Looks like started off, they were blasting out the put and buying back the call. There are about 10,000 open on the puts, about 8,200 on the call. By the end of the day, a total of 7,000 had traded on the strike on both sides. So clearly this was some interesting unwinding. And then they decided to go forth again out to NOV, doing 7,000 of the NOV combos as well. I don't have prices on those, but clearly someone playing the old roll game out here in this very, 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 very cheapy name and trading some deep in the money stuff. Could we perhaps be looking at another box, Mr. Andrew? We talked about a box a while back. Could there perhaps be another box going up here in Yogi?
So a little boxing in Yogi is what you're thinking. I was thinking more of roll, more of like a well, in the old days we called it a jelly roll. A combination.
Good God, man, you are old.
I am old. A combination closing in October and rolling to November. And the thing is it looks like they are selling the put in October, which means they had the short combination. You know, they're riding this stock into the basically to $2.87. But that's not good enough for them. No. They want to keep the short going into November and strangle the last $2.87 out of the Yingli Green Energy Holding Company. So this is clearly a determined short seller. So again, a lot of open interest on that combination October. Probably can't borrow the stock, putting the short position on and riding it right into the dirt for November. And you know, who knows? They might be right, but oh my gosh, you really got to not like this stuff.
Yeah, this is some aggressive paper, you know, and you're right. It is a roll. Clearly, you know, they didn't put it up at the same time, which would have indicated more of a box type trend. Box usually in the same expiration month, typically, but still interesting paper out here. And we only had a chance to profile the ACK on the site. The NOV went up later. But yeah, this is we don't see this very often. This is definitely the definition of unusual. Listeners, I'd be curious to hear your takes on this one as well. Meanwhile, we got to keep on rolling with the show, listeners. This time, even though the Viceroy isn't here, we got to delve every once in a while into the fun that is the Xpress Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is indeed the portion of the show where we usually dive into, courtesy of the Viceroy, a tour into what's cooking over there in the land of OX and the tools and the questions, all that fun stuff. The Viceroy isn't here, so I thought we'd resurrect in his honor one of our favorite segments. I know you guys like it too. The old trading patterns guessing game, of course, utilizing that great tool they have on OX's platform to tell you what some of the OX clients who are trading one underlying are also trading. It also works for the options, but it's all in the same options for that one underlying. That is fun, so we'll keep it to the underlying. Since you guys are playing, I'm looking at the names here. I'll let you guys choose your first victim. Which name do you want to guess on?
Let's do Apple.
Okay, I had a feeling you're going to go that way. All right, Apple it is. Don't blame me, listeners. It was Uncle Mike who picked this one. Let's go here. All right, we're going to guess. Oh, these are not what I expected. We're going to guess the top 10 underlyings, or as close as we can, listeners, that people who are trading Apple, remember, this is the stock. This is not the options. People who are trading Apple underlying, what other underlyings they are also trading. Uncle Mike, since you picked it, I'll let you go first. What's your number one pick?
Well, I know what I want to pick, but since you said what you said, saying you wouldn't expect them, that makes me think that the one I want to pick isn't going to be the right answer. But I'm going to assume that since you're the type of guy that likes to mess with people's heads like you've messed with mine all the time, I'm going to still go with my original instinct because I think that that's what you think I was going to do anyway. So I'm going to go with Netflix.
What that sounds like the old argument from Princess Bride, never mess with a Sicilian when death is on the line.
That's right.
Netflix, a good guess, sir, but unfortunately not in the top 10 today for Apple. There are some of the familiar names. I'll give you guys some insight, some clues. There are some of the familiar names, but I will say this, the top 3, you're probably not going to guess. All right. Mr. Andrew, we shall turn it over to you, sir. What is your guess?
So people that like to trade Apple, well, you're saying the top 3 is not familiar. Wow. How about GoPro?
An excellent guess, sir. And number 4. So you're right up there. Number 4, getting up there. GoPro number 4. All right, Tusaw, redeem yourself. What is your guess, sir? I'm guessing. I'm going to tell you right now. You're probably
since we're not going to guess them, I'm going to go with Goldman Sachs then.
There you go. That's not a bad guess. Also, not on the top 10.
0 for 2.
There you go. You shouldn't have picked Apple. You're hurting yourself, sir. Andrew, see if you can extend your lead. What is your next guess?
Okay, I'm going to go Mobileye.
Mobileye.
MBLY.
That one is not on here, sir. You guys aren't hitting the usual suspects that I know you want to hit, so go ahead. You can hit some of those.
All right, so I'll go with QQQ.
Good guess. Not the Qs, but I'll give you number 7, the E-mini NASDAQ December 2014 future.
Okay, so I'll take what I can get.
I'll give you that. And let that be a hint for some of the other things that may be lurking on this top 10. If you think futures, you would not be incorrect.
Crude oil.
Yes. There you go. The number 1, number 2, and number 3 underlyings that Apple traders were trading. That's what blows my mind about this one. The number 1 was the DEES 2014 crude future. Number 2 was Jan, and number 3 was NOVE. So there you go. That's the first 1, 2, and 3. So that is very interesting to me. I would not have guessed that. I know crude very hot. I didn't think crude had the depth of penetration with the retail heavy crowd that trades in Apple that it clearly does here on the OX platform. The OX clientele always surprises me as to what underlyings they will trade with what and how sophisticated they can be sometimes. So this is this is interesting. So number 1 through 3, crude. Number 4, GoPro. Number 7, E-mini NASDAQ DEES 2014 future.
So wait, just to be clear, I own the top 4, right?
Yes, that is all you.
Did Tusaw even register?
Tusaw has not been on the list. I gave him number 7 as like a charity.
I was going to say oil next after you said think futures. It just happened to be that you got the hint right before your turn.
Yeah. Actually.
Umbrage.
Well, you know what the thing is? The OX clientele definitely, when they see something trending, and the oil trend has not been good. So I think they've been taking advantage of that platform and hitting the old sell button on it.
Yeah, that's true. Probably. I haven't looked at Idea Lab lately, Alex's other baby, but of course, I'm sure it's spitting out some interesting crude trades right now, probably in the futures as well. So could be interesting stuff out there. All right, one more guess to redeem yourself, Uncle Mike. I'll give you 2 more.
You'll give me 2 more. All right. Let's see. So you said think commodities earlier. So by thinking futures earlier. So
now I will give you another hint and say you're done with futures.
We're done with futures now. Okay. I will say Triple D, 3D Systems.
No, it is not in the top 10, sir. Andrew, I think you can knock another few off here. Actually, you get one more guess for Uncle Mike, so go ahead.
Silver Wheat and SLW.
No.
Man,
you're not guessing.
I'm off my game today. I haven't had any long calls in my account for a couple of weeks. It's just screwing me up.
You're shaking. You're shaking with withdrawal at this point. Andrew, let's see if you can knock down a few others of the top 10 here.
Okay, I'm going to say Alibaba.
Yes, number 5.
Okay, and Priceline.
Close. No, not Priceline, but some other names you might mention. So there you go.
Tesla?
Andrew pretty much got the top 5.
He pretty much whooped me.
Number 6, Tesla. Surprised you guys didn't go there. Number 7 was the E-mini NASDAQ future. Number 8, Facebook. Surprised that one didn't pop up. And then number 9, Yahoo. Number 10, Twitter. 1 through 3 really blowing my mind there. The crude futures on NYMEX. That's interesting and or impressive at the same time. I guess really quick, we'll play around. I haven't done the Apple options. We got to get into some questions too, but there is the Apple option patterns as well. That shows you essentially the top option trades for Apple on the OX platform. Maybe, Uncle Mike, you can redeem yourself with some of these. What would you guess is the number 1 Apple option trade from OX clients?
Front week 96 put.
You would think that, and you would be wrong. I'm looking at these actually, and this is interesting. I'm not sure if I'm assuming I'm using this tool correctly, which is it says the top option trades for Apple, and the number 1 rank is not that. I'll give you guys hints. Think a little bit longer term.
January 100 call.
Also no, but you're in the right month. I'll give you guys that. It's all Jan. How crazy is that?
It's that end of the year buying palooza that people like to do. I'm going to say that you're going to go more out of the money and say something cheaper though, like the Jan 110s.
Yeah, and also incorrect. I'll just tell you guys because this is a weird one. The number 1 Apple option traded today on the platform was the Jan 60 put. I'm guessing this may not be correct though, because it says the number 1 Apple contract traded 329 contracts. I'm guessing they did a lot more Apple on certain strikes than that. So I'm going to go out on a limb and say maybe this tool, this option one, is telling us something else than what we think it is. It says top options trades as of 10/16/2014. So perhaps 329 of the Apple Jan 60 puts is the big trade. That just sounds like an odd one. I would not think on a day like today people will be trading a lot of essentially $35 out of the money puts in Jan. But hey, I could be crazy.
That's a head scratcher.
Yes, that is a weird one.
It is.
There we go. 2 interesting ones today on the old trading patterns. You can play this game yourself, listeners. Surf on over to OX. Click on the toolbox if you are indeed a client, and click on that trading patterns to kind of play around. It's a really cool thing to see what other people are trading who are trading the underlyings you like. Maybe you'll find some interesting correlations, something else you want to trade. Meanwhile, it's Thursday. It means it's time for us to roll right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, let's see how many we can get through here. First off, question from Ajax11. I like that handle. He writes, or perhaps she, what's your take on the big VIX pop yesterday? Over 30, a bit overdone. Time to short some VIX here. Maybe time for a new term, Ebola premium. I like that. We did touch on this a little bit at the top of the show, of course, in the trading block. I do like the Ebola premium. I did kind of allude to that earlier as well. Certainly some of that being baked into that VIX of 31, which is, of course, a little bit just crazy. But we did talk about that earlier. VIX cash, of course, settling in a little bit today. Not as much as it had, but coming off about a little over a handle today, settling into the mid-20 range again, so well off that high of 31 that we saw print in the cash there. So an odd spike, probably just looking at what the market is saying today, definitely a bit overdone. I don't know how aggressive you want to be here at shorting VIX, but some people might say even with a realized vol in the 10-day realized vol in the 20 range, there still is some room for shorting, perhaps certainly at that 30 level. Mr. Andrew, we'll start with you. What was your take on that spike over 30 into the 31 range? Clearly a bit overdone. And is it time to short some VIX/Ebola premium here?
Yeah, I mean, when it was trading 30, though, the market was down 2%. So at the time, I think that's normal. They're just letting vol because, I mean, when you think about it this way, the market if it just flips down 2%, when traders, are like, well, it's easier if the market just kind of ratchets down. But when you have that possibility of the snapback, that's usually when, those vol prices get higher. So do you sell the 30? Well, you could sell the OCK. What you could do is you could do like a 27, like OCK 26, maybe 28, 1x2 call spread for a credit, something like that. Still got risk. Still short that upside call in VIX. For a credit, the vol's still really high. It will probably work out. It does give you a little room. Are we going to see 30 again? To be honest, like I said last week on the show, I thought realized volatility was going up. That's what the VIX futures were pointing to. Still pointing to some realized vol. Wouldn't surprise me if we opened down 1.5% or 2% again tomorrow, because whatever, as long as everybody's still worried about the Europeans instead of just accepting the fact that the Eurozone is not going to grow marketably anyway for the next 1 year or 2 years or something like that, that's when I think, some of the realized vol will start to kick down a little more here, maybe back down into the 18 range, or at least VIX down into the 18 range. But up here, I think it's going to be harder to maintain this. We got 2 days in a row where the closes are relatively flat, even though intraday was huge. But if we don't get that tomorrow, you'll start to see the VIX come down a little bit. So, yeah. So you could sell some. You could trade a 1x2 call spread, selling 2, buying 1. But there is the risk. Again, it's your short and upside call in VIX, and it just went from. But again, 30 is a better spot to start it than even farther up. So. It's a risky trade if you're long something else. Let's say you own some SPY puts and you want to finance them, or you're long some TLT calls, something along those lines. I don't think it's a bad idea, but selling upside VIX is always a high risk trade, and I'm not until I see some continual lower closes in VIX. I'm just not sure it's on its way down. So.
We got a related question here from Mr. Ian Taylor, so we'll roll into that one. He says, we always hear about buying VIX calls or verticals during big spikes. How come no one ever talks about selling VIX puts or put spreads instead? Shouldn't they also perform well under that situation? Good question here, Mr. Ian. And you're right. A lot of the love, the interest, the focus for VIX is on the calls. I think that's for a reason we've kind of hit on many times on this show. That's where the action is. That's where a lot of people use VIX. Whenever we talk about VIX options volume, I think these days the open interest is about 4.5 to 1 calls over puts. All of the activity is in the calls, because on days like we saw yesterday, and even a little bit, not less so today because it came off, but yesterday definitely we saw that big pop. That's where the action is. That's where the VIX tends to outperform. And that's where you have that juice built into the calls as well. You don't have it as much on the put side. So the attraction for selling the puts out in VIX land is less. Yes, they will perform decently on a day like yesterday. The underlying is going to rally. They're going to come off, and it's going to be a decent trade for you. But it's not going to have anywhere near the explosion that you're going to have on the call side. Like, look at yesterday, gapping up into the 30 range, haven't been there in several years, and all off a lot of this consternation and flux that was going on in the market. You're not going to see that to the downside as aggressively in the VIX, and that's why, again, we talked about this many times, the VIX is biased. The underlying market is biased to the long side. That makes VIX biased as well to the calls. But c'est la vie, that's just the way that product trades. So if you want to really capture that big explosion. Again, that's why Andrew was saying it's so risky to write calls out there, because you have that. No one can predict that explosion effect, that gap risk that's in VIX, and that's all to the call side, not really on the put side. Again, that's why it's not so sexy to be out there selling puts and put spreads as opposed to trading VIX calls and VIX verticals. Mr. Rocklobster, anything to add there?
Well, yeah, when you sell a put, you're short Vegas. So when those calls are exploding, the puts are exploding as well. So one of the most aggravating things is, okay, VIX is going up, you sell a put, and it doesn't go down because the volatility went from 125 to 190, which is what's happening right now. The OCT 22 put in VIX is $2. The October 19 put is 50 cents, and it probably was 50 cents when the VIX was 30. So, the vol gets so high, and you sell these things, you're like, are they ever going to come in? So that's part of the problem. And VIX is so vol connected, it makes it very difficult that way. So I think the best time to sell puts in the VIX is when it's 12 or 13. Other than that, selling puts in there is at best a kind of a flip of the dice.
It is a bit of a coin flip. I'm looking here at these OCT puts in like the 19s, and they have come off quite aggressively. Of course, they are getting pretty close to expiration too. So you did do fairly well if you blasted those out and right into the teeth of the madness. They were trading about looks like the high was about 210, getting into that range, and they since of course are trading today at 30 to 40 cents. So you did all right, but it was, I'm sure, perhaps an interesting period for the people who were trading. Anything to add, Uncle Mike?
No, I agree with what you're saying. If you're going to do something in the VIX, you're looking for a big move, so it makes sense to be a call buyer.
All right, we got one for you here, Uncle Mike, before we wrap up, close out the old mail block. This is from a Fargo fan. I'm not sure if he's a fan of the city or the movie, or maybe there's a TV show, and maybe he's a fan of all of the above. I don't know. But he writes,
maybe he's from Fargo.
Yeah, indeed. Maybe he is from Fargo. Question for Uncle Mike. Where does he stand on his beloved Apple now that it's below the 100 strike? Any changes to his position? I'm thinking about potentially wheeling in, starting with the Nove 90 weekly puts for $1.20. Thoughts? Uncle Mike, we didn't really touch that much on Apple really today. Of course, it was selling off like all the rest, off about 1.3% today, closing today 96 1/4. What's your take here on the big fruit company in the wake of all this hullabaloo?
Well, today they had their big show out there in California. I haven't had a chance to evaluate it or look at it yet, but nonetheless, I still like Apple right now. For the time being, it's definitely held strong. I think it's kind of consolidating right now because it has had such a big run. I would feel more comfortable on it once it still broke above 100. But for the time being, if you're going to sell a 90 put, I think that's a pretty safe bet for the time being. But if it comes down to 90, be ready to take your loss. I don't know if I would necessarily play the roll down game if it did go down to 90.
There you go, listeners. No big adjustments to his position, and not a huge fan of wheeling in there. I guess the other side of that then would be, if you were going to wheel in, where would you start thinking about it?
Well, if I was going to wheel in, what I would do is probably like the 95 or the 96, sell that at the money premium and get in now. And then I would have some type of a risk management, either like a stop loss or perhaps another put, just create a put spread / wheel type trade to where I don't know if I would necessarily follow it down past 90.
There you go, listeners. Our Apple devotee giving you his take here on all things fruit-tastic. All right, that's all the time we have for the mail block today. Now we're going to dive right into a really quick Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show we tell you what we're watching for the rest of this week into the weekend. Got to kind of crank really quick here, so we'll just dive right into it. Mr. Andrew, we'll start with you. What are you watching, sir?
I'm watching, really ultimately, if VIX can close at a low vol for the day, which it has not been able to do in, I think, 6 straight days. So, and the reason I say that is, as an old XPX trader, as an old option trader, I like to see folks coming into the close and selling volatility. right? Because that essentially means that they're selling it today because they think it's going to be lower tomorrow. And you just haven't quite seen that here the last few days. There's just continual, I'm going to say just like solid buying. Intraday they feel okay, but toward the end of the day, they just can't quite make that sale. So it was close yesterday. It was close today. And we'll see what kind of an opening we got tomorrow. Google didn't have great earnings, so that's probably going to drag the NASDAQ down a little bit. But that's mostly what I'm keeping my eye on. Also, keep an eye on future premium as we kind of move into, VIX expiration next week. There's VIX itself, the pricing of all the options is very underwater right now, with VIX trading around 25 in the future around 22 and change. So, maybe there's a little opportunity there that if the cash just doesn't really sink down. But right now, future traders are predicting VIX trading in the very low 20s. And I think tomorrow at the end of the day, we'll see whether this European worry has some legs or if we're kind of in that protracted 2011, as the Europeans, they get their act together, then they don't. And we kind of have this seesaw of market volatility. But I don't get it's not like the euro's falling apart like we were worried about in 2011. It's more like they just need some common sense with budgetary matters, which of course for politicians, is very hard to do.
Indeed, and that's a good point. We were so busy in the trading block, didn't even mention Google coming out after the bell. That shows how many other things were going on. Google, of course, closing today by about 524 half. That straddle going out right around $30. That AUK 525 straddle looks like they're down about $15 or so in the after hours right now. So Google clearly not exciting the street, but not a vol or not a underlying apocalypse, at least not yet. We'll see how it opens tomorrow. All right, and Uncle Mike Tusa, what are you watching for the rest of this week, sir?
Just to add to a little bit of what Andrew said, definitely everything that he had said, and then just various earnings coming up. We are in the midst of earnings season. We do have Apple earnings coming up on Halloween, I believe it is. Oh, no, wait.
I think it's November 5th, actually. They're a little late this year.
Oh, okay. No, we're looking to tell the truth on this show now. I'm showing it on the 20th, which is this coming Monday. So be watching that with bated breath, as my good friend Mr. Longo would say, and just looking to see if the S&P can hold the 1817 level, because I think that's a key number right now.
Good stuff. Thank you, sir. And that is going to do it for the Around the Block segment. But before we go, as always, let me check in with each of my cohorts here, my partners in crime on the old All-Star panel, see what they have cooking that may interest you until the next time we can all gather here on the old program. Starting off with you, Mr. Rock Lobster, what is cooking in the land of the pit?
Thank you. Yes, and coming to Option Pit very, very soon. As a matter of fact, it's so soon, it is next week. It is October, I believe, the 23rd, or is it the 24th? It is the 23rd. Learning to use volatility to put the wind at your trades back. Actually, it is quite similar to the shenanigans that Mr. Tusaw tends to pull with his calls and his put spreads and all that stuff that makes his bathroom break so painful during the day. So we think a little bit or a lot alike on these kind of things. So, letting volatility help you what type of positions are going to best suit the current market, especially for a market like this. So that will be free. It will be on October 23rd. So come by on Thursday and check it out.
All right, thank you for that. And now I turn our attention to Uncle Mike Tusaw. What is cooking in the land of RCM Wealth Advisors?
Well, we have our Miami event coming up in December, but in the meantime, folks, this is a time where I do a lot of work for clients whenever we have pullbacks like this. So if you are interested in working with someone who does a lot with options, and as my good friend Andrew would say, do stuff, give me a call, 312-212-3531, or send me an email at mtusaw@rcmam.com.
Good stuff. And the Viceroy couldn't join us, but let me, of course, encourage you, surf on over to optionsexpress.com. Check out all those cool tools that we were profiling, some of them today, like the trading patterns tool. I love that. I use that all the time myself, even when I'm not playing the guessing game here on the old program, as well as the Idea Hub and all that great education stuff that Alex is always talking about, their live events. You can find that all the way over there on the Options Express Hub. Just click on the Education tab. And the cool thing about that is you can get all that stuff coming up all the coming up events and the education, all that fun stuff, pre-login. You have to be a client. Just surf on over to optionsexpress.com. Click on, one more time. Just surf on over to optionsexpress.com. Click on that Educate tab, and you can find all that good stuff. And on behalf of Uncle Mike and the Rock Lobster and the Viceroy, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.